Good morning, everybody. Welcome to Hardcore Mortgage Real Estate Business Podcast for a Wednesday, January 10th, second podcast of the new year, 2024. Happy New Year, everybody. With us on our podcast today, podcast brought to you by Capital Mortgage Lending, powered by CMG Home Loans, NMLS number 1820. We have Miss Lisa Lawson. Good morning, Lisa, you're an NCAA champ.
I am.
Hail to the victors.
Yeah,
Lisa.
we had a
U
good
of M, Lisa
night.
Lawson
My nephews
here.
over, watched the game with my nephews, had a great time. So yeah, spent some quality family time till obviously late on Monday night, but yeah, super excited.
I imagine that you are extremely happy since the last shared national championship in football in the modern era was 1997, shared with Nebraska.
Yep.
But you got to hand it to the University of Michigan Wolverines. It pains me to say that a little bit, but they were the best team in the country. Jim Harbaugh certainly proved himself as one of the best coaches in the country. And once again, congratulations to Lisa Lawson and all my U of M friends out there. A lot of them went to the game in Houston, so it was enjoyable watching the game. Just so many people that I know are extremely happy. Also this morning, we welcome in Mr. Harvey Freed. Good morning, Harvey.
Good morning, everybody. And Harry, I'll put a little caveat on that. Michigan beating Washington for the NCAA championship. The last team to beat Washington was my favorite college, where my daughter goes, Arizona State. So we want to salute to Washington for being a formidable opponent, but not good enough to beat the Wolverines.
I don't remember when Arizona State won an NCAA national championship football team beating Washington, but I'm sure that's not what you're saying. You're saying the fact that they lost
a regular
beat them 17 or 18 games ago is what you're talking about. I know what you're talking about.
Yes,
but to throw Arizona State in a national championship conversation, Harvey, that we were having a nice little conversation, is a little bit what Harvey Freed does. Anyways, produced and directed by Roberto Beauchene. We appreciate Roberto. Becky Alley could be joining us. John Kolb is on vacation skiing in the great state of Colorado. Everybody, we got to recap a little bit here. Recap the Hardcore Mortgage Real Estate Business Show, the first one of the year. Harvey and Becky and I, we had on Michelle Sayward Realty Group, Thrive, EXP Realty, and Al Abdullah, partner in that nice real estate firm that they run down there. We had a great show. So Harvey, people just have to scroll down, go back and look at the show. And what did you think of the first show of the year, Harvey Freed?
Yeah, it's great here. It's starting to sound like 2024 is lining up just like 2023 did. And right now we're in that 60 to 90-day window where we're hoping more families consider home ownership. Those first-time home buyers and even this next step-up buyer, they're going to be fighting over all the homes that are going to hit the marketplace over the next 4 or 5 months. And it's really important to either save your money or maybe get into the game a little bit sooner, because the inventory is very light and you're going to be overbidding for these homes.
Yeah, we are seeing that actually in this happy new year that we're in 2024, first 9 days of January, Lisa, is that the early indications, and business has been strong the first 9 days. Now, you don't want to make predictions, but there is a trend going on right now the first 9 days. If it's this strong, the first 9 days of a new year, what does that tell you that's going to happen in the home buying process with a lack of inventory for 2024?
Yeah, I'm going to say the word unfortunately. It's going to be a repeat of the past couple of years. There's going to be, obviously, with the housing shortage and more buyers than homes available, it's going to get a little crazy. But, a lot of people slow down around the holidays. This isn't something, they put things on hold. They decide they're going to look for a home, after the holidays. So you have this little pocket of time right now where rates have been favorable, continue to be favorable. People, aren't quite out of that holiday mindset yet. And that could be an advantage to a home buyer, because you've got this little pocket of time. I'm going to tell you, it's not going to be long. I was kind of hoping to go through March. I really honestly think we'll be lucky if we get this pocket of time through February. I think things are going to ramp up sooner than they have in past years, but we kind of called that spring kickoff. So I think if you really want this to be the year, you need to start early, give yourself that are available, be able to look at all the houses. And it may be that you might not find a perfect one until summer. Now put yourself in the best position you can right now. So if something does come up, you can take advantage of it.
Lisa, I couldn't agree with you more, and I think the very early indications are bearing that out. I don't understand why. I understand human behavior. We're a herd mentality. We're a bunch of sheep. We follow the crowd. And I never have, but I don't understand why people are waiting when there are very few homes out there. And if you're not in it right now, at least out there looking, kicking tires, doing what you have to do, you're going to get farther behind when March, April, and May for sure hit. So, Harvey Freed, what do you think? I'll tell you what I think, Harv. I think that you're going to see a better than average January in the home buying market. It's certainly going to be more active than it was last year. We've already seen that. It's already been more active in the first 9 days. So January is it's way more active than it was last year. And then going into February, that's always a crapshoot because you don't know really how much the weather in February is going to play out. And that is a big factor. And all you have to do is take a look at the weather patterns now, what's going on now. So weather in the northeast is a big factor in home buying.
Yeah, no doubt, Harry. The inventory is going to be the story again in 2024. There's no doubt that the empty nesters, the soon-to-be retiring folks, maybe when they get a taste of the warmer weather down south, it'll give them a little inspiration to list those homes in the Midwest where we're concerned about, obviously. The tight inventory is definitely keeping the prices higher. Another hurdle for home buyers and first-time home buyers is this lack of inventory. Again, last year they had the double whammy, a look at higher interest rates. Now we're in a little bit of a downward curve there with the mortgage rates potentially dropping, but then again, that will bring on more customers, more competition when you make an offer.
Yeah, I think that there's a lot to be said for that. I think there's a lot to be said for people that think that mortgage rates are going to go down dramatically. I am certainly not one of those people. The Federal Reserve did back up again that they're not looking to start to cut. They're probably going to keep things stable for a while, which just means the opposite. It means they're not going to increase. Okay, just because you don't increase doesn't mean you're going to start cutting. I think they're going to stay stable for a while. They're going to go down a little bit, but I don't see a dramatic change, especially in the first and second quarter of 2024. Lisa Lawson, I'm going to hold up a little bit of a headline. See, there's that. House prices in Metro Detroit, right? Rising the most in the country.
Wow.
So here we are in metropolitan Detroit and in the Midwest. And usually what happens in the Midwest is a result of an influx of coming in from the East and the West. Well, two and a half years ago, prices started really taking off on the East and West Coast. And now here it is 2.5, 3 years later, where we are rising on a percentage basis the most in the country, Lisa. We've seen a steady increase in home prices. I don't think that's a bad thing. That's a very good thing, which is another reason why people should not wait. They're going to pay more in the future for a house.
Yeah, not only do they pay more in the future, but if you don't do it now, you're going to miss out on the opportunity to gain equity. And, equity contributes to things like generational wealth. That means 5-10 years down the road, maybe something happens. You maybe not have enough saved in your nest egg. You could possibly tap into that equity out of a situation, or maybe you just need to consolidate debt. The longer you wait, the less equity you'll have. Not only and I'm not talking about the equity you're going to get from paying down loan. I'm talking about appreciation. As home prices rise, you gain equity in your home. So it makes so much sense to start. And I can tell you right now, I have people that, I talked to last year and they started looking and they just said it was too competitive and they were going to hold off for another year. And we've circled back, and what have they all said? I've had literally 5 of them that I spoke with yesterday. They are all kicking themselves that they didn't do it last year and that they held off another year. Yes, the rates might have been slightly higher last year, but the prices were lower. So they're all saying they wish they would have done it. Don't be the oops, I wish I would have, could have, in the past. Do it now.
Yeah. Hey, Harvey, went out to a closing. I was talking to Lisa about it. Lisa gave me some great directions out to a closing in her neck of the woods. It was supposed to be Snowmageddon. I don't want to jinx it. It was supposed to be Snowmageddon this morning. So I left very, very early to go out to a very, very nice closing. Former client, easy closing. How about this closing took 12 minutes? That's the way they should be. It took 12 minutes. So I drove an hour and 10 minutes for a 12-minute closing, but that's okay. It was an extremely successful, great closing. People were on the closing table, everybody jovial and happy. Harvey, what we're seeing also, I want to bring that up because it was just, all 80% of the closings go out without a hitch. The other 10 might have some moving parts. And then there's 10% that no matter what you do, Harvey Freed, it's never good enough. I'm kind of over that. But let's talk about some really good things. Harvey, FHA loans are extremely attractive right now, making up almost 15% of the market, the overall market. Now, some pockets of the country, it's way less, some it's way more. But overall, that's up from 12% from last year. You've always been an FHA guy. You signed on that 30-some years ago. You love FHA loans. Explain the advantages of an FHA transaction.
Well, that's great, Harry. The true advantages are the fact that FHA, the Federal Housing Administration, will be a little bit easier on families that have had credit issues in the past. So lower credit scores are considered acceptable, 580 and above. Now, most of the FHA underwriting guidelines still will require a 600 and above to get maybe a little bit better interest rate and to make your approval process a little bit easier. There's no doubt here, the debt to income ratio plays a huge part in that. Americans are racking up debt in a horrible pace right now. Over the holidays, that buy now, pay later loans are really hitting a lot of families. I saw one of the news stations yesterday ran a story on it that, buy something now and there's no payments for 24 months. Boy, if you don't pay that on the 23rd month, the interest is just crazy amount, double digit, 28, 30%. FHA, the Federal Housing Administration, has always been there for families looking to put low down payments, 3.5% down, a little bit of look the other way on some credit problems you've had in the past. And also, it allows you, if you had a foreclosure or a bankruptcy, to get back into the game and purchase another house. It allows families that have had some hurdles in the past to become homeowners again. But one of the reasons why more and more families seem to be going FHA, and you just mentioned that the percent of FHA mortgages is about 3% higher than the average has been for several years, is truly this debt to income ratio. The cost of living, people ramping up those credit cards, that additional debt is turning your back end ratio into something that's not acceptable perhaps on a conventional loan. We don't really see conventional loans going over 0.47. That means 47% of your debt to income, your income is already being used up by this debt. That's a lot. When it doesn't leave you a lot to pay for insurance, for food, for utilities. So again, FHA is allowed. It's a great question. FHA is allowing families to have higher back end ratios. And Lisa will tell you, a lot of times we'll get a family member 51, 52, up to 54% back end ratio. But with compensating factors, this FHA loan is a great way to go.
Yeah, Lisa, go ahead and chime in on that. You're a big FHA loan originator. You've loved it. You've done it for over 20 some years. Let's gather some expertise from you and some knowledge. 15% of the market now is FHA.
Yeah, I mean, Harvey's right. It is perfect for people with blemished credit. Everyone has a situation, and not everybody has 800 people who've had a little hiccup, whether it's medical bills, whether you just got in over your head or whatever it was in the past. It allows for blemished credit. But to even, there's other ways to utilize that. Like Harvey was talking about the debt to income ratio. I had one recently. It approved. It was over 56% back end. And everyone's like, well, why would someone want to go into a loan like that if they're going to be house poor? But sometimes they're really not. Sometimes they may have additional income that they haven't worked at long enough. In order to use income from 2 jobs for an FHA loan, you have to work both jobs for 2 years with no breaks. So maybe you worked a second job for 1.5 years. So I can't actually use that income to qualify you, but I know that you have it. Or sometimes there's people who are using things like child support or spousal support. We have to prove a 36-month continuance. So if your kid is 15, you're not going to have 36 months, but you're going to have 32 months, and you can make the payments, you're going to make other arrangements. So there's other reasons to utilize FHA besides just blemished credit. So I don't want people to think, oh, I don't want FHA, or, let's educate realtors. We don't want FHA because that person might not close. Maybe something happened with their credit. That is not always necessarily the case. We utilize it for other reasons besides just credit.
And Lisa, that's a great point. Just because of the way we keep score in the mortgage industry, if you have a 680 credit score, it doesn't mean you have bad credit.
No,
Okay,
not
it
at all.
doesn't. But the way that we have to keep score in the mortgage industry, it might throw it in a different bucket the way we look at it. If you are a 47, 48 back end debt to income ratio, I know those are fancy words, doesn't mean that you can't afford the house. It just means that the way we have to keep score with that additional income means that we can't qualify it. So I don't want people out there to get the feeling, get the misconception that FHA loans are bad loans. They are certainly not. They're great, as a matter of fact. Also, Lisa, there's no shortage of mortgage programs out there, is there?
No, there's so many programs and more coming out every day. So not only is like FHA, everyone knows, conventional, we all know USDA for rural areas, the VA loan for the veterans. Within all of these programs, there's almost like sub-programs for first-time home buyers. There's down payment assistance programs. There's so much out there and available, and new things are coming all the time that, it's worth a phone call. You may have tried last year to get approved and maybe you didn't have quite enough money or maybe something else was going on. It doesn't mean that you can't get approved this year. So
yeah, Harvey, I'm going to go. Harvey, I'm going to go to you for last words. I'm back to Lisa because we're kind of running out of time. We got to, we got some real business. I mean, educating the public, what we do on podcasts and the Hardcore Mortgage Real Estate Business Show. And Harvey's going to tell you who the guests are. But this podcast is brought to you by Capital Mortgage Funding, powered by CMG Home Loans. 1820 is our MLS number. Listen, we've got a great show coming up. Harvey, who's coming up on the show this weekend?
A great local guy who born and raised and grew up in this area, James Conklin. He's an EXP agent. He's excited about coming on. He listened for the first time, and he's been an agent for a while. He didn't even know. He was so shocked by the information we were sharing with everyone. So we're excited to have him on. And Harry, just to recap, and my last word was FHA, Federal Housing Administration. These are great, great mortgages. Let me just explain that they're not for people that are low income. Well, they could be, but they're also for families that have very good, substantial amount of income. The FHA loan limit now is $498,257. That's almost $500,000. And what it means is, yes, your purchase price could be over $500,000. You put down your 3.5% down. Your loan could be as high as $498,257. This isn't a mortgage with something bad on it. There's nothing attached. There's no bad stigma. It's a great, great mortgage, allowing more and more families to get into home ownership.
Wonderful, wonderful. Thanks for that. And Lisa, last words of the day, and we'll wrap it up.
Yeah, like I said, you don't know what you don't know. So even if maybe it's something you tried last year and it didn't work out, please try again this year. Home ownership comes with so many other benefits. Besides, people always say the pride of home ownership. There's a reason that phrase exists. And I don't want people to be discouraged. Guidelines change all the time. There's so many new programs out there, and give yourself the best opportunity to set yourself up for success. Give us a call as early as possible. The minute you start thinking, maybe I want to do this in the summer, call us now. We can spend a lot of time, months, getting you ready, making sure that your credit score is maximized, that your debt to income ratio is where it needs to be, and explain all these things to you. And then you can make an educated decision on things you could pay off or things maybe you move around to put yourself in the best position. So the earlier you call, the better.
Excellent. Lisa Lawson, also go ahead and tell everybody about the bridal show that you and Becky Alley are going to be hosting.
Yeah, so the bridal show at Ford Field, it's not till February, but so many newlyweds attend this. It is February 18th at Ford Field from 12 to 4. And we will be there. We always like to say helping, new spouses get into houses. There's a great program called Home Funded that we're going to be explaining, and maybe we'll touch that on our next podcast, but it allows a 2-to-1 match up to $2,000 of grant funds to help newlyweds, or technically anybody buying a house, towards closing. And it doesn't even have to be a family member. It allows anybody to donate towards your home purchase. So sometimes people are putting this on a wedding registry. So instead of asking for pots and pans, you're getting money for a house. So there's a lot of great new ways to get into property. So definitely, if you're one of those newlyweds, and if not, give us a call. We'll explain the program.
Yeah, thanks for that, Lisa. And Harvey, the quick math on that, if you're having 100 people come to your wedding and they gave you $50 a piece, that's $5,000. We'll match $2,000 more on that. So automatically, you'll have a $7,000 down payment Call Lisa Lawson, call Becky Alley, call Harvey Freed, call Capital Mortgage 1-800-LOW-RATE. We can put you into that program. Harvey Freed, Lisa Lawson, Roberto Beauchene in the booth. This has been the Hardcore Mortgage Real Estate Business Podcast for January 10th, 2024. Join Harvey, Becky, and I on the Hardcore Mortgage Real Estate Business Show this Saturday morning from 9 to 10, 97.1 FM. Happy and excited to be back in 2024. More in 2024. We'll see you soon.